More on Twitter and the tech sell down with Sophie Lund-Yates. She's lead equity analyst at Hargreaves Lansdown and joins us live now from Bristol. And first of all, let's talk about this crushing move that we saw in tech stocks overnight, with the top 6 tech plays in the sector losing a collective $500 billion in market value. The Nasdaq also down around 5%. Sophie, what do you think drove this, and is it justified?
Hi there. Yes, I mean, you've said it there. It's been absolutely an abysmal trading session. I think, to be completely frank, really what we're seeing is, I think you were talking about it earlier, inflation is now entrenched, it's embedded. There is a realization really that we are at probably the most daunting patch of any economic cycle, which is when inflation has really stuck its roots down and isn't budging. And there's also kind of a bit of chatter about perhaps it getting even worse. And as we know, the riskier assets, that is just absolutely not what you want. And that's why we're seeing particularly the Nasdaq being punished and very tech heavy, very reliant on those riskier, higher valued stocks. So really, perhaps unsurprisingly, this is coming down, I think, to an inflation realization.
So what's the outlook moving forward? A re-rating of the sector here, perhaps? Can we expect further declines to come, or is this maybe a buying opportunity?
To be completely frank, I think a bit of both. I think, to be completely honest, I personally think there is probably further room for things to get a little bit worse before they get better. But at the same time, we are seeing some of the best companies in the world, in my view, perhaps being unfairly punished. So there is a bit of scope, certainly, I think, for opportunity. When I say that there is further to run and for things to get a little bit worse, I personally don't think we're going to be seeing huge crashes from this point. So I think between now and the next few months, certainly there's going to be some big opportunity. I think that there's a lot of stocks that are being lumped in together simply because they fall into that growth category, when actually that's not necessarily fair. And there's a lot of differentiation and therefore a lot of really tangible opportunity, I think, in the tech sector particularly.
We're talking Twitter today as well, after shareholders approved Elon Musk's takeover bid. Of course, he doesn't want it. So what's the next move here?
Certainly he doesn't. That is the big question, isn't it? I think there's a lot of attention on the shareholder deal. You know, shareholders have just moved to approve the takeover, which is unsurprising when you look at Twitter's performance year to date and just more generally a lot of the questions that are coming out. Musk could be this knight in shining armor for existing shareholders. But unfortunately, that meeting that we've just had doesn't mean a lot other than sentiment. Musk and Twitter will be going to court, we think, in October. That is still happening. So that hasn't been derailed. So really, the outlook from here is contingent on the outcome of that case. And I think more broadly as well, we need to be looking at Twitter's outlook, despite who takes it over, who's at the helm. There are some real question marks over its outlook, particularly financially. We're looking at a really terrible macroeconomic backdrop, and it's lost a lot of its competitive edge in the ad revenue space. So, really want to watch, despite what happens in that court case as well, I would say.